Hello, it is Monday. It is also the 16th of July, and it is 2012. Let's take a look at silver daily chart. Also, an interesting setup within the more shorter term 20-minute chart. So we'll take a look at that. This trend line, which connects the resistance points within the intermediate term bear market that originated at the very end of February, start of March, which means it's many months: March, April, May, June. We're looking at 4+ months now of this bear market. And of course, if we break down below 26, well, then it's even going to continuously be longer because it isn't over yet. I don't know if the bear market is over yet. Tops and bottoms are known well to the fact. Now, if I draw a parallel line and I connect it with the first low or even one of these lows, then I get the same old story. A, it has not broken past resistance yet at all, even at pierce above it. B, it's tested breaks below and didn't hold as well. Again, that's the primary trend. In an intermediate bull market, you would see something like that, a trend going that way. That, of course, has not occurred yet. I look at this 18 average as a level for breaking out past and changing the trend. One significant move is when it gets above this average and then continues, maybe not that big, but continues up with higher gains, which forces the 18 moving average to change its direction to an uptrend. The second is when it breaks above it, then comes back, finds support, and then breaks higher as another one. Well, that didn't occur back within this mode in here, where it stayed within this upward band, but then obviously didn't break this key resistance in here, and down she went. Now, just a couple of weeks ago, we had this little break above in here, and it's been consolidating within this band. Still a higher low to this one, but we don't know that as of yet. For if this continues up and does something like that, it would be a lower low, as tops and bottoms are known after the fact. If the price action without it going lower can manage to go above here, I will state we have a lower low and a higher low, and a higher high, but that's not the case. And if that does happen, then that would be the case of breaking by this band, finding support within it, and then breaking free above it to possibly change the trend over. I think for the intermediate term bear market to really have some legs to run, it really needs to get above 30. And for the midterm, long-term bull market, it's got to break above the top of this chart. It's got to get above 37.58 for sure. And now let's take a look at this on a 20-minute time frame. As like I said, there's an interesting little pattern within this, and it's got to do with Fibonacci retracement once again. But I like to show these because it shows by the book very well. This level here was not resistance on the way up today. This top is last Friday. That's Friday. And I know you can't, if you look at the times, you can just make sense. It makes 2 days. But this was Friday's top. And the gap open today was, or whatever, somewhere in here. Regardless of the fact, this was Friday's high. And then the lows from today. When you break above this, and say you're here at 27.20, 22, whatever, and you notice that it's not finding resistance, then you're really looking for one of two things, and one of them could be two things itself, so three things. You're looking for one, for it to A, find support rather than resistance at this level, which didn't happen. B, you're looking for that pierce above and then find resistance and maybe have a test later, something like that. That didn't happen. Or you're looking for a fast move to the next level, which did happen right in here. Now, had you shorted at this level, then you need to put a stop somewhere above it, and you're looking to sell back down here. Well, if your stop didn't get violated, it was a winning play. Had your stop been violated, that means your risk was very low, and you only need to win about 35-37% of the time to start seeing okay gains along the way, because your risk is much lower than your potential reward. With that being said, like I say, when you get up here, you'll be looking for those three things. One, find support or a pierce above. It was the pierce above. Or that fast move to the previous high, which is why it's important to ensure that your stop, if you play this, would be A, above where the significant pierce should be, but also B, enough where your risk works within your reward factor. So if you're risking 20 cents to win 30 cents, you win that half the time, you're doing pretty good. Okay, now let's move on to what we're seeing now. We got this uptrend line. More often resistance is tested, more likely that you take it out. It's battling above and below the resistance line as of now. And it's pretty much been testing 27.40 in the 2 o'clock hour for quite some time. Basically, if you see it above here, everyone sees this pattern, or a lot of people. That's why it's not uncommon to get situations where you might go from 27.44 to 27.54 in maybe 100 seconds or so. It's obviously not that uncommon because everyone sees the breakout pattern. People have their stops in place. If people are shorting in here, they maybe put their stops in here. Who knows how it plays out? But that's generally good reasons why you do see that breakout come in. Now, tomorrow, Ben Bernanke will be speaking within the markets. And I don't know what he's going to say other than the same old song and dance, so I pretty much have an idea of what he's going to say. I don't think he will hint on this session too much about quantitative easing 3, but the way I look at things like QE3, it seems that they've been doing it the entire duration of his lifetime, or my lifetime, or many people's, because we have an economic model where only the central banks, like the Federal Reserve of the United States, can mine Federal Reserve tenders, or legal tenders, I should say, and anyone else is not allowed to, and because of that, that guarantees interest, and to keep the model afloat, they have to keep on stimulating it over and over and over again, which is why we're seeing it stimulated so much. And that will be it. So until he speaks, it's going to be a little volatile, but it's usually either 2 o'clock or 12 o'clock p.m. Eastern Time. You can check it out. I did a quick search, but I couldn't find it. But I do know that he is saying some stuff tomorrow. And thank you for tuning in. Bye-bye.